there are two stocks that I'm waiting for right now to be falling enough in price in 2026 to buy more of. Two companies that I have owned. One I bought in 2013, but I sold it way too early. And then the other one, I bought it in 2018. And both of them, if I had held on, and I did with one of them, were the best and would have been the best investments I had had over a decade. Anyway, one is Apple, the other is Google. And I was sitting, I had read all of the letters of Warren Buffett in 2017, and I had invested in Apple already in 2013, but I had actually sold it for a small, I think I had a profit of 100% or so in 2015 because of some currency profit and also increase in the price. But have a look, it was a big mistake to sell it in 2015. Here you see since 2016, 27% growth, and a tiny bit of dividend makes it 28% for the owners. And it is at the high price, but I'm waiting now for the stock to get back to normal price. I'll tell you, if you follow along, why I believe that it will get better in Apple, why I would want to buy it at a certain multiple that I may show you. Maybe you will see what I mean. And but first, let's go and check Alphabet, and I'll show you both of these companies, why I believe these will continue to do well, and what my analysis is based on, why I would want to hold them for the next decade, and add to them if the share price is back to normal or below. Simply said. The snapshot, according to Fiscal AI, gives tremendous numbers. Earnings per share growth 25% a year in over a decade. So I would have done much better just buying one stock, you see. Same with Apple. And I like to see high return on equity with low debt. And Google does not have any debt. So it's fantastic. So it's actually better than this. It's you can see that, yeah. Let me show you the profit margins are fantastic. They grow their equity. They even buy back shares, which kind of slows down the equity growth, but nevertheless, it grows at a really high pace. The story was that, yes, I did buy this stock in 2018 for the first time. I can show you where and why. I was admiring this company a lot. I admired YouTube. They started showing the segments of YouTube shortly after I bought the company here. And then you see it had a little dip, and I invested, and this was probably one of the best investments I had, and I still hold on to the shares. I have added more. I added 2 times along this timeline, and maybe you can spot where. I bought my first shares in 2018, and then 5 years after, and then 3 years or 2 years after that. You see here. And I'll show you why I did it, and you can maybe wait for the same to happen again, and at what price that will be. And I am waiting for this to happen again as soon as possible, maybe in 2026. And I will be happy to buy and add to my positions here. Actually, it's a wonderful company. And the story is there's always a lot of news or uncertainties about this company, especially maybe this revenue. Let me see if I can show it for you here. I think I need to clear out some metrics or load it again. Let me see if I can load it for you. I think I will take out this and see if it changes. No data. Okay, then I will go in and get it from the table. Okay. So the story was I bought it in 2018 and I saw these fantastic growth numbers as you see here. But then I saw that the price was lower compared to the multiple that I'm using today also. And you see that the growth since then has been roughly fourfold in revenue, 400 billion now. And you can see also that the EBIT is roughly $130 billion. I see my screen is covering it a bit, but 130 billion. That's close to 25% or 30% margin on the revenue, which is fantastic. Yes, so if I can get to show you here again, I want to show you the segments. Now I'll show something. Total revenue and the search, you see that the search is a bit more than half of the revenues. So of course it's a concern if the revenue will be dropping, but we have more. And by the way, we don't see any drop in revenue, even though we have more competition maybe in ChatGPT, etc. But if you were to spend millions on advertising, wouldn't you want to have the best return on investment to the advertising platform that has the best they have the best targeting on the internet for all the users that they want to reach. Okay, so let's see here. You have now the revenue seems to be correct, roughly 400 billion in revenue, and the Google search is really large. And the story was, will there be more competition? From what I can see, they're trying really hard to show that there is a lot of competition, and they were fighting against the competition authority that they wanted Google to sell Chrome back in 2024, but it was settled and they can keep Chrome. And then you see that they continue to roll out AI products in the browser. So that makes a huge competition advantage to ChatGPT and OpenAI, in my opinion. It's so much easier for the customer to just continue using the browser, and they have their Gmail there. There are 2 billion users on the apps, and that gives them a tremendous advantage to know the audience and the targeted audience. So okay, I believe that it will continue to dominate, and the world is getting more larger and more money is being spent on advertising, and the companies get the best return, at least on the internet, with the platform of Google, in my opinion. But of course, you have Meta and the platforms where you have Instagram and Facebook, etc. But we shouldn't forget that YouTube ads is a really, really growing segment, competing with video all over the world, and nobody can really create a video platform like this with such so huge mass of people uploading videos here that to make something competing and the scale of things to make it to operational and have it profitable, it's really hard to compete with such a huge video platform. And you see that revenue has fourfold in a few years, and I think that the EBIT is comparable to the rest of the company. And then, if you think that this revenue will continue at the same pace, or 3x or 4x in 10 years, then it will add, let's say, another 100 billion. You will have maybe you will have 150 billion in revenue from YouTube in 10 years, maybe less if you're conservative. And then I think that this adds another maybe 50 billion in operating profit to the shareholders from that growth. And the operating profit is 130 billion now. So if everything is flat but YouTube keeps growing, it will be a quite good return actually, only from YouTube. Don't you agree? The earnings in the operations of the whole of Alphabet is 130 billion. And if you think that only YouTube will, the rest will stay flat, but YouTube will say be 150 billion in 10 years and have 30% margin, am I correct then to say that it's roughly 50 billion from YouTube alone, more or less? And yeah, let's say it has 10 now, but it's a lot. It will add really high growth to YouTube as a whole, but of course it will. I think it will grow on the other segments as well, and subscriptions from YouTube Premium and all the other services like the photos and the cloud and the app store or the Google Play, and also not to mention Google Cloud revenue, which I see they are growing really much now, and the EBIT is 15 billion. Really strong business, the Google Cloud, and you can check out the cloud business of Google. They make it so much easier for developers to build quickly customized apps in the Google Firebase and the system that they have there now. So it's I'm trying it myself also, and if you continue to subscribe here, I may share some tools with you, or you can use the tools that I'm using myself to find out when these shares are cheaper. So let's have a look. I told you that I bought this company in 3 chunks. So let's take out the pricing multiple. You go to financials here and then to ratios. And since this is a company that usually has a lot of cash on its balance sheet, I don't like to use price earnings so much, because it depends on the capital structure. What's a good comparable metric? Let me just clean up this a bit. Feel free to skip ahead 10 seconds. I will try and show you a figure of the EBIT. Okay, here we go. So the summary is that, yes, the stock is at all-time high now, roughly speaking, and the growth historically has been really high, and can that continue? So maybe it's quite expensive now with Google, depending on your time horizon. But you see, historically, it's not been more expensive compared to the earnings it has now. But you see where I bought. I bought in November 2022, or autumn 2022, and I also bought in April, May of last year. And I also bought in a dip in 2018. And just buying it at a multiple of 2022, it gave me roughly more than 35% a year. So, but it has had a lot of growth. But if the growth is a little bit less, and if I can be able to buy more shares at 20 here, I would be very happy. And there you see it, yeah. And the equity is really strong and growing. So it depends a lot how well they will do investments into the cloud and AI, of course. If they don't pay it out as a dividend, the excess earnings. So. Okay, that was done. Google, and let's see Apple. If you I appreciate if you watched the video until now. Really, I'll try to give you some value that maybe you haven't heard from Apple shareholders before. You see that the price multiple is high compared to historical averages, and it was low, down to 20 at the lowest last years. But when Warren Buffett bought, maybe it was around 10 in multiple. So you see here, it was a tremendous opportunity. While people didn't understand how much valuable and recurring revenue Apple has. It's not only the products that people love to buy the iPhone and the iPad, and once they start using the Apple ecosystem, they will continue and do so, I believe, because I've tried myself. I've been an Android user for a long time, and let me show you. It has a recurring nature. It seems like it's lagging a bit here now. I wanted to show you the revenues, but maybe I can show you as a table. I want to show you, here you see it, okay. So now we got it. I'll take away the multiple and show you the revenue segments. And I see on the top, it's correct, we have roughly 430 billion in sales from Apple. And the majority is iPhone revenue. And it's not so impressive as the story goes, maybe, that it hasn't been growing that much, let's say from 2018. It's not so much growth. And the same with the iPad. It's more or less flat, 50% growth in 10 years. And the wearables, the same. And the Mac is also not so much growing, but the profits are growing more. I'll show you that. But here, check this one. This is services revenue. And you see that the service revenue was roughly 25 billion 10 years ago. And it's now almost five-fold 10 years later. And I think that this is something that many investors overlook. I see it myself as an iPhone user now for a couple of years, that I'm starting to pay a subscription for the storage of the pictures, for example, and different services. And once I start to use these, I don't want to switch to Android, or I don't want to switch to Google Cloud to store all my photos. It's too much of a hassle, and it's not the same experience as an iPhone user. So if you believe that the general market will make more people prefer iPhone over Android as the world gets wealthier and more people can afford spending on phones compared to the rest of the living costs. And if you also believe that people love the product so much that they are willing to pay to store their photos in the whole family, for example, and they don't want to switch to competing services for this. So this iPhone is more like a real estate, and that they as Warren Buffett said, he couldn't. He said that a family that he would typically see that the family would rather have one less car than to not have iPhones in the family. So this is very sticky, and I think that when you see this, if you have happy long-term iPhone users, you can charge a little bit more every year, more than inflation, for the services. And the cost is not increasing more than inflation, I believe. It's getting easier and easier to get cloud access, I think. So if you see the services revenue, do you see this? 18% over the last 10 years, roughly. And that's overlooked, and this will be a big contributor to the iPhone shareholders' growth, I believe. Very, very sticky business. And just imagine if services has a 50% profit margin in the future. That would be enormous, but if you think that the service revenue will at least quadruple in 10 years, and the rest will be just normal growth, just they pay well for the products, but let's see if the services revenues would quadruple and reach 450 billion. That's a huge number, but there would be more users on the ecosystem, and they can charge a little bit more for those who are paying, and there will be more people not paying right now, but they will start to be paying for the subscriptions, and that will be many factors increasing this, in addition to the ability to increase the price a little bit more than inflation, and increasing the operating margin because the costs don't increase with the volume. Okay, so that's important. And if you think that let's say it approaches 500 billion in 12 years, let's say, and profit margin of 50%, then we have 250 billion profit from services in 10 years or 12 years. And that is more than what Apple is earning now, of course. Apple is earning 100 billion in profit before tax right now. And if we add, you see the EBIT is 140, okay. So 140 in EBIT now, but the profit after tax is around 100, I believe. But then, yeah, then it will be a very substantial growth just from the services. So if we have EBIT of 140, and let's say the services have maybe 40 of that now, so in 10 years, maybe there can be 200 billion extra, and EBIT will roughly triple just from services. So that's a very good quality there, and then if the share price can be low enough, back to normal, maybe there's an event or something that will make the company have an event. Let's see if I can get the latest figures. I see September 2022, but that's because I see the iPhone user base. So let me show you that. Here we see the multiple. So let's I want to own Apple more, but I am a bit greedy, and I hope to be alerted when the price reaches the lower end. You see maybe below 20 if everything is the same, and technically if the interest rates are the same, etc. But if it gets back to the low end, I will be more interested. And if you are as well, soon you will be able to follow a link below. There you have a dashboard, and there you can enter your multiple that you want for one of the favorite stocks that you follow on the channel. Your own customized multiple. And whenever, for example, Apple drops below 20 in that multiple, you will be notified via the dashboard. And then you can have a look and see if everything is the same, or you can watch the videos here on the channel if I think the same, or if you have questions, you can ask me. And then it's a way to be more easily notified, and you don't have to update the price alert many times, because conventionally, like, people have to update the price many times if they want to buy Apple cheaply. But you see, it's enough to just put price earnings 20, for example, and then you get notification every time that happens. I hope that is valuable and you like that idea, and follow along if you want to learn more about these companies, and comment down below if you want to have other stocks that you think fit the philosophy here, and hope to see you in the next one.